Hey everyone, just a quick rundown on what's been going on this week. So pretty much all the currency majors and the dollar index, it's more in a sideways market condition right now. You can take a look at the dollar index here. In terms of price movement, it is really small at this point in time, just around 0.5 on the index. So the dollar index is pretty much flat. We still have support at 106. Below 106, we still have 105.50. But let's take a look at the major currencies here, and this is on the Aussie USD. We've seen a little bit of a gain, but it is still pretty much contained within a 1 cent range. We're not really exceeding 64 cents at any given point. We are barely just hovering very close to that 64 cents. So we are going to take a look at 64 cents, which is the resistance one on the weekly pivot, as still the main resistance on the Aussie USD. The Euro USD also pretty much flat. We are still just hovering around between the pivot as well as the resistance one. Very close to resistance one, which is located at 1.06, and in terms of price movement for the past few days, it is still contained within that 1 cent range. So we're not actually looking at a lot of range movement here, especially on the pound USD here. We do have a few data is coming up from the UK. We just had the release of the inflation number. It was a little bit sticky. We still got 6.7. We didn't see that drop to 6.6% on the UK inflation. But this one here, if we take a look at the range for this week, you can take a look at prices actually still trading within the Monday's range on the pound USD. So we're not really moving anywhere in terms of all the major currencies. The dollar yen, also the same thing. Although one thing to focus on with the dollar yen, there was a slight sharp dip yesterday, and it all actually happened within 1 minute. And this is the dip there. So about midday on the dollar Japanese yen, we see a very quick dip. And if I can go into the 1 minute time frame, I just want to show it to you. This is not it's not something that's isolated or anything like that. It just really happened in the 1 minute, and we've verified this with a few sources. Pretty much all of the data that we have, we saw that 1 minute drop on the dollar Japanese yen. So it is about 1 yen drop pretty much, and this is again not isolated into a provider, but I think a lot of the data here, even the ICE data, are pretty much showing this drop there. We're still trying to figure out what is the cause, but typically when we see drops like that, it kind of reminds me of a flash crash that happens about 10 years ago in the equity market. That's pretty much triggered by algos. Now there's probably a reason behind this, with the algorithms, getting nervous around the 150 level. We saw that quick drop there. It is a 1 minute drop, and it immediately bounces back up again. So it was really more of an anomaly. There are sources that talks about, this could be in the reaction to the Ministry of Finance or the Bank of Japan, predicting more inflation growth in 2024. But that was old news. It was actually news that was published about a week and a half ago. So we at this point in time, we would attribute it more on the algo. I would classify this more as a flash crash rather than anything else. But the disruption doesn't change our view on the dollar Japanese yen, that we are so close to 150. I think the market is still attempting to take the dollar Japanese yen, to test that 150 level and potentially even lift it up. Now, obviously, for this week, there are going to be two instruments that we definitely want to focus on. The first one is definitely gold. We had that Marubozu on last Friday. That was a complete full control of buyers in the market. So we're looking at about 98% of buyers in the market on Friday. And the expectation for that is that we're likely going to see this continue. We basically just break that high. We created a new high today. Price has actually touched around 1940 intraday wise for gold here. So we have seen this one extended a little bit, and we put out a report on gold here. We much prefer to have that long position above 1920. That was yesterday. We break through it. We are right now facing the other resistance, which is 1940 and 1950. So with prices now, President Biden is expected to arrive in Israel today for talks with Israel, and things could intensify. Obviously, there's that hospital incident at this point in time, and that causes a little bit of a stir in the market as well. Things could escalate further, and this is still something that we are keeping a tab on at this point in time. We're looking at 1940, 1950 as a key resistance, but anything beyond 1950, we are actually pretty much in the clear, because once we surpass 1950, we have exceeded the 20th September high. There could actually be room for this one to move closer to 127.2, which is about the July high, and that's opening up ways about 1980 to about 1985 for gold. The next thing would obviously be oil. And for oil, as things intensifies, and there's that notion from Iran yesterday for more of a preemptive action, which hasn't taken place yet, which is good, I would guess. But it kind of keeps oil traders on the edge. Again, the thing that we are most afraid right now is that if Iran gets involved, if all the other Arab nations surrounding it gets involved, things could get really ugly for oil prices. So it could actually push oil prices up, and we're currently on track for that. This is still creating a new high. It is quickly approaching $90 at this point in time. The $90 is definitely going to be a trigger point, because that's where the 61.8% on the daily time frame is located. Beyond $90, it's going to be 92, 94, 95, 96, and ultimately potentially even towards 98 for oil there. So again, let me just show you the oil prices intraday wise. What's going on right now here is that we have gone beyond resistance 1 on the daily pivot. In terms of potential movement to the upside, we're still likely going to be capped at about $90. That's closer to resistance 3 on the daily time frame. We're still above the Ichimoku cloud for oil on the hourly time frame. So yeah, this one here is a little bit slower in terms of how it reacts. I think gold is definitely the one that's very volatile right now. It's directly impacted with the sentiment. If things escalate, that would be the one thing that could potentially do more of a quick run. Again, current pricing for the gold at this point in time is 1937. We still have 1940 capping it. Intraday wise, we're definitely going to be looking at what 1950s, whether it's actually going to hold as a resistance. But again, any break above 1950, and that's where we're talking about a lot of room to the upside. We are going from the current price level to about 1985. It's still 47, considering the days range that started with no wick as well, if you haven't noticed it. But today we basically just kind of just step on the pedal for gold here. There is no low. The open is the low. We don't have a wick at all. So could today be another Marubozu candle? That's for us to see. That's for the market to obviously act on, obviously with what's really going on. And definitely today is a very important day, because President Biden is going to be traveling to Israel, will be arriving in Israel. Things could go really bad or things could go really well at this point in time. But we are considering, the worst case scenario that things could escalate. And if we take a look at the measurement in terms of what is the potential, we looked at $64 movement on Friday. Today we are estimating, if things escalate, the potential for this one to reach 127.2 is actually about $61. So we're still looking at around $60 there. So could it be another potential Marubozu? Time will tell. But for now, good luck with your trades. Just be mindful of what's going on with the whole conflict, and I'll see you soon.